Hello everyone. Today I am going to discuss with you basic finance for non-finance people. So actually we have to understand. So I'm not going to explain you finance concept, but I would like to introduce you what are the terminologies in finance. That is the main aim of this video. In future, we can discuss little calculations regarding the finance also. Why finance matters? So why organization want finance function? Mainly there are three reasons. Helps in making informed business decisions. So that means when run the organization, time by time, organization want to take very critical decisions. Before take the decision, organization want to understand their financial status. So based on the financial data, if organization can make the decisions, that will be help for the organization sustainability. Improve financial planning and budgeting. So each and every organization in each year they are making financial and budget plan. So if they want to prepare finance plan, budget plan, they want to know about the financial data. Enhances cost control and profit maximization. So definitely, if organization want to maximize the profit, they want to control, reduce the cost. So that understanding they can take from the finance matters. So because of these three reasons, organization want finance function. Then there are some key finance terms. As very previously I told you, okay, I'm going to introduce you about the financial terminologies. So first one, very famous in the finance, in each and every time people talk about this term revenue. What is mean by the revenue? Revenue mean total income from the sales. So that mean organization doing some sales activity. Okay, it may be manufacturing or the service, something they are selling. Okay, so total income they can gain from the selling, that is called revenue. Revenue. Then second term, expense. What is mean by expense? Cost incurred to generate revenue. So that means if organization want to generate the revenue, they want to spend some money. That cost we call as a expense. Expense. The third term, profit. So what is meant by the profit? That is very important thing because everyone expecting the profit. Profit mean revenue minus expenses. Profit equal revenue minus expenses. So that means total income we consider and we have to deduct total expenditures, then we can take the profit. Fourth terminology, cash flow. Movement of money in and out of the business. That means when organization conduct the business, they have to money out, then they have to take the money in. So money out and money in, that is major function. Cash flow means how smoothly money go and return from the organization. That circle we call cash flow. Cash flow. Another special term, it is called assets. What is mean by assets? Things the company owns. Things the company owns. So as example, cash we can consider as a assets. Inventory That is also thing the company owns. It is also asset. Then vehicle, building, equipment, everything we can consider as a asset. Last important term is liabilities. So what is meant by liabilities? What the company owes. That means payable things, loans. So that means in this moment it is in the organization, but it has to go out. So liable. So that is called liabilities. So we have discussed about very important key financial terms: revenue, expense, profit, cash flow, assets, liabilities. We'll move forward. Understanding financial statement. So most of the organization want to make basically three financial statements. One, balance sheet. Balance sheet. So that means balance sheet is like a snapshot of asset, liabilities, and equity. So if we can take into the one page what are the assets in the organization, what are the liabilities in the organization, and what are the equity in the organization, that is called balance sheet. Then income statement. Usually we call this as a profit and loss account. Because of that, I just put in here P&L. It shows revenue, expenses, and profit and losses. So when consider the profit and losses, it may be what is called that operating profit, it may be net profit, it may be gross profit. So there are several terminologies. So income statement shows revenue, expenses, and profit and losses. Third important financial statement is cash flow statement. Track cash inflows and outflows. Based on the cash flow, organization can track the how much amount inflows and how much amount outflows. So that is organization can understand through the cash flow statement. So there are three main financial statements: balance sheet, income statement or profit and loss account, cash flow statement. Profit versus cash flow. So what are the difference? What is profit? What is cash flow? Profit is not the same as cash flow. So we have to understand profit and cash flow, two different things. A business can be profitable but still pays cash shortage. Even the business profit created, sometime cash outflow is high when compared with the cash inflow. So because of that, organization pays in some cash shortages. Managing working capital effectively is key. So because of that, if organization want to smoothly run the cash flow, if organization want to smooth run the cash flow, and if they want to generate the profit, managing working capital effectively is one of the key aspect. Budgeting basics. What are the budgeting basics? Help control expenses and plan for the future. Why organization doing the budgets? Because they want to control the expenses. So without budget, if they if they made some expenses, then no control. So we have to budget first. So based on the budget only, we have to spend the money. And also it will support to organization to plan for the future activities also. Then set realistic financial goals. So based on the budget, organization can create financial goals. Those are very realistic because those are based on the budgets. track actual versus planned expenses. So budgets support organization to track the actual expenditures versus planned expenditures. Then organization can take some corrective actions, decisions time by time if there are some so high deviations. So these are the budgeting basics. Now, what is mean by cost control? And also, most of the time people talking about the break-even analysis. Okay, in future we will can discuss about how to calculate break-even points. We'll discuss in future presentations. But in here, fixed cost do not change with production. As example, rent, salaries, those kind of fixed costs. So organization want to bear some fixed cost in each and every month. And also there are some variable cost. Variable cost mean it is change with the production, change with production level. It may be raw material. Sometime organization has to spend money for the overtime. Okay, when number of output is high, sometime organization has to pay incentives. So likewise, the variable cost change with the production rate, production levels. Break-even point means simply if any point revenue equal to the cost, that means no profit, no loss. That situation we call break-even analysis. No cost, no profit. That means revenue and the cost 100% equal. Okay. So cost included fixed cost and variable cost. That also we have to understand. So revenue is total income. So total income when equal to the cost, it is called break-even analysis. Break-even analysis. So if you want to make a profit, definitely we have to enhance the revenue. If the cost increase, then it will be not the profit, it will be lost. When consider the financial decision making, invest in profitable opportunities. So based on the financial condition, okay, organization can invest in profitable opportunities. And also organization can cut unnecessary cost. Okay, so it is also based on the budget. Okay, they can take the decision. Monitor financial health regularly. Financial health means each and every time assets should be high when compared with the liabilities. So then the financial health is very good. So that thing that status can maintain if the organization know financial data in each and every moment. Common financial mistakes also I included in here. Ignoring cash flow management. Sometimes organizations ignore the cash flow management. They not consider about how much cash outflow and how much cash inflow. They forget. So that is big disaster. Overspending without tracking. Sometimes without tracking, without accounting, without budgeting, organization is spending money. That is also not good. Not preparing for financial risk. Sometimes financial risk can be occurred in the organization. So organization should have proper financial risk mitigation plan. Okay, well in advance they have to prepare if there is a financial loss, how organization survive with that condition. So that is definitely organization want to consider. If organization not prepared, that means it is big financial mistake. Then uh, conclusion and key takeaways from this little discussion. Finance is essential for all business roles. Understanding key concept help in better decision making. Regular financial tracking ensures business stability. So I think you may have very simple knowledge about the financial terminologies and why finance, what is finance. So I would like to summarize one by one again. I'm not taking too much time. So we discuss about basic finance for the non-finance people. So why finance important? There are three reasons: help in making informed business decision, improve financial planning and budgeting, enhances cost control and profit maximization. Key financial terms. There are several key financial terms. In here we discuss six: revenue, expense, profit, cash flow, assets, and the liabilities. Then there are three types of financial statements: balance sheet, income statement or profit or loss account, cash flow statement. Profit versus cash flow, that is totally two different concepts, different terms. Even though business is profitable, sometime organization face for the cash shortage. So that is because of the cash flow related issues. Budgeting, it is very important because budget help to control the expenses and plan for the future, set realistic financial goals, track actual versus planned expenses. When we talk about the break-even point, break-even mean exactly organization revenue and the cost equal. That point we call break-even analysis. Cost, there are two types: fixed cost and variable cost. When take the financial decision, so what are the financial decision? Invest for the profitable opportunities, sometime cut unnecessary cost cutting activities, monitor financial health regularly. So there are common mistakes in the finance also. Sometimes organization ignore cash flow management. Sometimes organization is spending money without tracking, not prepare for the financial risk. So these three things very critical financial mistakes usually some organization do. So conclusion is finance is very essential for all the businesses. Understanding key concept help in better decision making. Regular financial tracking ensure business sustainability. Right, thank you very much. I'm expecting to meet you with another finance related video. So we'll discuss about how to calculate some special finance terminologies. Thank you very much. We'll meet again.